Welcome to the Riskwiser Zone, the show where we dive into the latest developments in the world of stocks and finance. We've got an exciting story to kick off the show, as Robinhood Markets has just announced a major expansion into prediction markets through a joint venture with Susquehanna International Group. The new partnership will take control of LedgerX, a regulated crypto derivatives exchange previously owned by Miami International Holdings. This acquisition positions Robinhood to launch a futures and derivatives exchange and clearinghouse, deepening its presence in the trendy prediction market industry. According to reports, the independent exchange will be managed by the joint venture, with Robinhood serving as the controlling partner. Susquehanna International Group will act as the day-one liquidity provider, while other market makers are expected to join to enhance execution quality. The venture will acquire MIAXDX, a CFTC-licensed designated contract market, derivatives clearing organization, and swap execution facility. This company was one of the first to offer regulated Bitcoin options in the U.S. under CFTC regulation, and was part of the FTX empire before its collapse. Miami International Holdings will retain a 10% equity stake in the new exchange. Prediction markets have become Robinhood's fastest-growing product line by revenue, with more than 9 billion contracts traded by over 1 million customers in just 1 year. The new exchange will serve Robinhood derivatives and other futures commission merchant platforms, aiming to deliver a broader selection of futures and derivatives to traders. This move has already had an impact on Robinhood's stock price, which surged over 12% following the announcement. Analysts cite the expansion into prediction markets as a key driver behind the recent price momentum. We'll be keeping a close eye on this development and its potential implications for the market. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We've got a fascinating story for you today, all about the Chinese tech giant Alibaba. Now, I know some of you might be thinking, Alibaba? Isn't that just an e-commerce company? Well, yes and no. While they did start out in online retail, they've since expanded into all sorts of areas, from cloud computing to artificial intelligence. Now, you may have heard about the recent White House memo that alleged ties between Alibaba and the Chinese military. But Citi analysts are saying, don't worry, it's just a short-term overhang. They're sticking with their buy rating and 2118 price target, and why not? Alibaba's been making some impressive moves in the AI space, including the launch of their Qwen app, which has already seen over 10 million downloads. But here's the thing, while Alibaba's definitely a player in the tech world, their valuations are looking a bit steep. We're talking about a price-earnings multiple of nearly 26x. That's not exactly cheap, and yet, some analysts are saying that this is justified, given the company's progress in AI and their dominant position in the Chinese market. So what's an investor to do? Well, as always, it's all about doing your research and making informed decisions. If you're bullish on Alibaba's prospects, then maybe now is a good time to buy. But if you're more cautious, you might want to wait and see how things play out. One thing that's certain, though, is that the world of tech is constantly evolving, and companies like Alibaba are at the forefront of that evolution. So whether you're a fan of Alibaba or not, it's definitely worth keeping an eye on them. And speaking of keeping an eye on things, we've got one more story to share with you today. It's all about the latest developments in the world of finance and how they might affect your investments. Welcome back to the Riskwiser Zone. As we wrap up today's show, I'd like to shift our focus to some exciting developments in the world of quantum computing. We've got not one, but two interesting stories to share with you. First off, Cantor Fitzgerald analyst Matthew Prisco has initiated coverage of FormFactor stock with an overweight rating and a price objective of 75. This comes on the heels of the company's impressive Q3 2025 performance, with revenues coming in at $202.7 million and gross margins expanding to 39.8%. The analyst attributes this growth to healthy demand for advanced probe cards, particularly those used in high-bandwidth memory applications. Meanwhile, Quantum Computing Inc. has released its financial results for the 3 months ended September 30, 2025. The company reported revenues of approximately $384,000, a significant increase from the same period last year. This growth was driven by an uptick in research and development services as well as custom hardware contracts. Additionally, Quantum Computing Inc. has started recognizing revenue from cloud-based access to its Dirac-3 quantum optimization system. Now, it's worth noting that both FormFactor and Quantum Computing Inc. are considered top players in the quantum computing space. However, as with any investment opportunity, it's essential to approach these stocks with a critical eye. While they may offer significant upside potential, they also come with their own set of risks. As always, we recommend doing your due diligence and consulting with a financial advisor before making any investment decisions. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.